So, what is the Bitcoin halving? The Bitcoin halving basically means that the amount of Bitcoin that gets created every 10 minutes gets cut in half every 4 years. This is a pre-programmed functionality of supply in the Bitcoin protocol. As we see here, from the first Genesis block to the first halving in November 2012, 50 new BTC was created every 10 minutes. Between this first halving and the second halving in July 2016, 25 Bitcoin was created every 10 minutes. From the second halving to the third halving, which is scheduled for May 2020,
12.5 Bitcoin
is created every 10 minutes, and from the third halving to the fourth halving in 2024, 6.25 Bitcoin is created every 10 minutes, etc, etc, etc. The maximum supply cap of Bitcoin is 21 million. There will only ever be 21 million Bitcoin in circulation. Therefore, less and less new Bitcoin will be created over time. Now, because of this limited supply, the scarcity of Bitcoin will continue to increase, and for any asset, scarcity enhances value. However, what makes Bitcoin unique is the fixed supply schedule, and the fact that the total supply is capped at 21 million. This is unlike gold and silver, which do actually have a variable supply, which has been grown over the last few decades, thus hindering their ability to act as a store of value, although they are nowhere near as bad as fiat, obviously. Also, on the longer time frame, mining of precious metals via asteroids could come into play and obviously decrease their price due to a massive increase in supply. Now let's take a look at these halving events and see if there are some takeaways. We'll start with a blue-pilled analysis. Well, not necessarily blue-pilled. The blue-pilled analysis is believing those who have a huge stake in financial service companies calling Bitcoin a fraud, when equity markets themselves have in many senses become Ponzi schemes. With the intention for founders and early investors who are accredited investors to dump on dumb retail money at IPO. Anyway, perhaps there are some similarities to a century ago, where those who wanted to bring about the Federal Reserve System intentionally provided misinformation in the media and posted articles about bankers screaming and protesting against the proposed Federal Reserve Bill. Since the bankers hated it, people assumed it must be good for the public, falling victim to the mind games of those playing high-level chess. Would this trick work again? Well, the thing is, people love bankers now, especially after 2008. Perhaps Bitcoin has been planned as a global reserve currency all along, as we shift from commodity capitalism to intellectual capitalism, and those who capitalize on this can be part of the new elite. Only time will tell. Anyway, so this isn't necessarily the blue-pilled analysis, it's more the standard analysis. Let's get into that now. So the first halving occurred in November 2012. We see this represented here via the blue line. So we have a 2011 bear market which had a 93% retrace from its highs, and then we reached the $2 bottom of this particular period. Then we rose up, and at the halving we had a price of around $11.50. Then after the halving we went to $270, setting new highs. There were 513 days between the bottom of $2 to the top of $270. So the second halving occurred in July 2016. We had a bear market which facilitated an 86% correction, and this period also coincided with Mt. Gox and also Silk Road, where some foolish guy thought he could bring a free market to an industry that a certain country has a monopoly on. Anyway, so during this halving period we have the halving in July 2016, which was not past previous all-time highs. However, after the halving we rallied to $20,000, a new all-time high. So we see some similarities between these halving events, and see each halving event is a crucial aspect to starting a bull market. We see in previous halving events that it is months after the halving in which the new all-time high is set. In each halving, there has been a rally of 12,000 to 13,000%. Patience and understanding the long-term behavior at play here is clearly very important. So with halving 1, Bitcoin took 513 days to rally as much as 13,300% from its pre-halving bottom of $2 to its post-halving top of $270. With halving 2, Bitcoin took 1,068 days to rally as much as 12,100% from its pre-halving bottom of $164 to its post-halving top of $20,000. So between 12,000 and 13,000% from the bottom of the pre-halving bear market to the top of the post-halving bull market. However, a crucial difference is that it took Bitcoin twice as long to experience that similar growth around the second halving period. So we have 1,068 days for halving 2, and for halving 1 it only took 513 days. So then with this analysis, after the all-time high, Bitcoin would top out to end the bull market and subsequently enter a bear market period that would see Bitcoin retrace at least 80%. So what about the current period? So for the current period, we see a similar pattern. We have a 2018 bear market, which resulted in a 84.5% retrace from its all-time highs all the way down to 3.1k, which is the bottom of this cycle. Okay, so people ask, how will it play out this time? Some people say that the historical performance is not indicative of future performance and how it's going to play out. There are those who say that one can actually infer a lot about how things play out in the long term. Generally with Bitcoin market, we have a hype phase and a bear phase, and clearly lots of speculation, lots of manipulation as well from exchanges and whales with large amounts of Bitcoin who chase stop losses and liquidate margin traders. We also have lots of news, both extremely bullish and extremely bearish, since the extreme viewpoints get more clicks and thus more advertising revenue for the particular media outlet. People use various indicators to try and trade over the short term. However, there is an aspect that is more important than any of these particular indicators in the long term, and that is market structure. So let's have a look at the red pill analysis. So for the first halving, we have an upward sloping trend roughly from about the bottom of the bear market. And essentially what happens is, along this upward sloping trend, we have two minor parabolic advances, and then we eventually have an upward rise and an upward rise, and then we break the all-time high, and then all bets are off, and then we hit the parabolic top of that particular cycle. We see a similar trend here in the second halving. We have an upward sloping trend, and along that you have two parabolic advances. Then eventually you will rise up to break the previous all-time high, and then you reach the particular top of that cycle, which in this case turned out to be $20,000. Okay, so what about the present moment? Well, we had a bottom of 3.1k in December 2018, so we've had one minor parabolic move from 5k to 14k. We've then had a correction to 7.5k, which corresponds to roughly the golden ratio, which is a number that comes up a lot in nature but also market analysis. So after that correction, we then rose again. Since we generally get two minor parabolics along this upward sloping trend, perhaps we'll see maybe 7.5k to around 18k, 17k, and then a correction again to around 12k along this upward sloping trend, and then maybe we start rising and break past the previous all-time high, and eventually the hype will start to build again. So the question is, what will our new all-time high be? Well, based on this market structure and basic analysis, some people say 100k in 2021, with a possible correction to say 20 to 30k. Of course, this is just speculation, and as a disclaimer, this is not investment advice. Some people say, what if it breaks this upward sloping trend? What if there's a recession? I encourage you to really research this topic, and as a disclaimer again, this is not investment advice. When one is researching, it is important to look at various sources of information and really scrutinize people's incentives. Incentives are a key driver of human behavior generally, and this is vital not just in crypto. As a general rule, most of crypto is a Wild West environment with many scams, and this is very predictable given the fact that we are still relatively early in the grand scheme of things. However, one of the best things to do is to find somebody with a track record of successful predictions or takes on the market, and who has an incentive to provide valuable information, and they have a consistency in their long-term thesis, which has proved accurate over time. And a great example of that is Kevin Svensson. Just like nutrition, your information diet should be of high quality. Since he started his channel, his calls include calling the bottom of the bear market to be $2,500. He did this in February 2018. And we hit 3.1k in December 2018. So at that point when he called it, that was a very good prediction. In addition to this, he called the correction after we had our first parabolic move this year to 14k. He called the correction to around 7.5k. And this proved to be true as well. And his wider thesis has proved pretty reliable so far. He has also stayed very consistent in his macro thesis, and this is also very important. You see a lot of people flip-flopping on their opinion and really changing their long-term narrative on a whim and on some news. Kevin has stayed very consistent to his wider thesis, and this is a good sign that his technical analysis on a longer-term time frame is very good indeed. Again, you should really try and diversify your sources of information. However, high quality information is crucial. As a final disclaimer, none of this is investment advice. This is purely for informational purposes. You should really do your own research on this particular topic. In the words of Mark Twain, history doesn't repeat itself, but it often rhymes. For more compounded valuable content, like and subscribe.